Hey everyone, how you doing today? I really hope you watched episode number 2 with me, Mr. Greg Dickerson, Thinking Big, School of Entrepreneurship. If you haven't, you're going to want to go find it. This episode is going to be one that he and I get all the time. We are obviously real estate business folks, but we get asked by followers and students, "Hey, what do you think about stocks? Stocks or real estate?" So I thought we would do an episode on it. I don't think we have done this one to date. So, Greg, I suspect you get this question all the time: stocks or
Always. Yeah, always have been. I get asked, do I do anything with stocks? Have I done anything with stocks and things like that? And of course, now the Bitcoin and,
Mm.
other things that are popping up along the way. But, you can go look at the charts in terms of the history of the stock market. It has kind of always, even with its ups and downs, it's kind of always gone up. Real estate's kind of always gone up. And there's arguments for and against each one. And, even right now, you can look at the bubble that we're in, and we're in a huge bubble on an asset class basis. And real estate is an asset class, just like stocks, just like cash, gold, bonds, and everything is just up and up and up. Bitcoin, the whole 9 yards. So the real interesting thing is going to be at the end of this cycle, when things change, where are you going to want to be, and what has proven to be, the true long-term strategy that plays out the best. And we don't know the answer to that yet, because we don't know where real estate values and what types of properties are going to survive and where they're going to be. We know what happened in 2008 and 9. This is starting to look a lot like that, very different in terms of what happened then and what can and will happen now, but the catalysts are the same. Okay, in terms of all the free-flowing credit, free-flowing money that overvalued the real estate market, easy credit, monetary policy, and interest rate policy is what triggered the collapse. We're kind of on that road right now. We are, we have a liquidity crisis right now. We have a liquidity problem in the markets. It's not so much rate-driven now as it is liquidity-driven. There's so much liquidity out there. So when things change and the faucet gets turned off, where are we going to be at the end of the day? But, generally over the long haul, stock market has, been on a steady, annual, 10% of appreciation and growth, over the long term. Real estate's kind of been there the same way. The only difference is real estate, you get tax, benefits that you don't get in the stock market. You can leverage real estate like you can't leverage with stocks and in stock market. Now you can do stuff on margin, but that's not the same thing as real estate. So there's a lot more advantages overall to real estate than there is in the stock market. But the problem is where the disparity comes in is in the stock market. Man, you can make quick bucks a lot of times easier than you can in real estate if you kind of know what you're doing. And there's a lot of those momentum trades going on right now where people are doing extremely well. So it kind of skews things. So it's going to be a really interesting experiment to see how it shakes out.
Yeah, for someone who, I was a stock guy for 3 or 4 years and had the success that one would want, right? $7,000 to almost 200. But ultimately, turned that back into 40 in, a couple of weeks from being arrogant and stupid. Some people like to point out, well, you still turn seven into 40. Yeah, I guess that's true. But I still look at the statement that says 198 and feel like an idiot. So yeah, I understand. But to me, it's really about the amount of work it takes. Because again, as we talked about in episode number 1, I think my job was to be the best I could be from 9 to 5 in my day job, because that was what I was going to take to buy my side hustle, right? Real estate or stocks or whatever. And I just didn't have enough time. I think stocks take more time. There's just more things in there, more businesses. You have stock risk, you have industry risk, you have market risk. What I like about real estate now, and again, you can tell me I'm slanted or skewed, I don't care, it's true, is if you learn your market, you do the work, you get really micro focused, you have an unfair advantage, because real estate is not like stocks that has a price every second. Real estate has ups and downs. It has emotions. You may find a seller that's just done and they're going to sell it at a discount. You can never go in and buy Apple $40 less than everybody else, but you can buy a house for 40 grand less because they had a bad day. It does happen, right? You also can use your creativity. Unlike stocks where you basically got to either go on margin or pay full float, you can find a seller. Like I bought 15 houses from a owner who was done. They wanted just a little bit of money down to cover costs. Then they wanted a monthly payment, which I could cover very easily, and gave me a low interest rate, so I would never refi them out. I picked up $500,000 in equity and have a note that's still lower than anything I could get at a bank. So I'm not going to pay him off, and he knows it. but it's definitely a win-win situation. So I think real estate, unlike stocks, has outside gains if you're willing to do the work, right? I still think both take work, but creativity, experience, focus pays off a lot better in real estate, in my opinion. What do you think?
Yeah. So if you're comparing cash flow real estate, so, rental properties, income producing properties, over the long haul, yeah, I mean, there's no comparison. So let's take stocks, for instance. We've seen, companies can go out of business tomorrow. Your stock is worthless.
Yep.
Your stock does not produce cash flow. I mean, you can have a dividend earning stock, but that's pittance.
Yeah.
It's not going to generate cash flow like, income producing property. And at the end of the day, and we've seen it here recently, if the Fed had not done what it did, the market was dying. It was going down. It would have collapsed, and we would be nowhere where we are now. The only reason those values are where they are is because what the Fed did. Arguably, the same thing with real estate because of interest rates and what you can borrow. But at the end of the day, stocks can become worthless and zero overnight and you have nothing. Whereas if a piece of real estate, you could lose all that equity that you picked up in those properties, but you still have cash flow and income coming in because people need somewhere to live. They need somewhere to operate the businesses that are going to be able to survive. So at the end of the day, even if cash is worthless and stocks are gone and we're all at the end of the line, if you have housing, you have something you can trade for other things.
Mm-hmm.
So you still have something of value. If you've got stock in a company that's gone or the economy ceases to exist in that realm, the worst economic situation you can imagine, you got nothing. You might be able to burn it and heat your house, but that's about it.
Yeah, the other thing I like, again, having experienced both worlds and investing ahead of and through the last real estate crash, right, the Great Recession, and through the dot-com stock bubble. The thing I like about real estate is if you're paying attention, I call it doing the work, you can see the turn coming and take appropriate action. Real estate turns slower, right? It involves masses of people who all have different emotions and buying and selling reasons. It doesn't turn like stocks, right? One of my stocks that I bought overnight was worthless, right? Enron, right? It was flying high and suddenly they were seen as a fraud and boom, nothing. That doesn't happen with real estate, right? We had time, right? We had 8 houses into the peak of the market, as I wrote about in that book behind me. We saw it coming, right? The affordability index was screaming, sell, sell, sell. So we did. And actually, we didn't sell. We exchanged because what was hot, there was something that wasn't, and that was apartments back in the day. So we went from 8 to 80 units. Yes, our net worth took a hit when it crashed, but our cash flow exploded because people needed a roof over their head and they were losing their homes. So again, I think real estate offers you, if you're paying attention, you don't get greedy, and you change. I call it dancing through the raindrops. You can make outside gains if you do the work.
Yeah, yeah, and it's and unfortunately, or fortunately, depending on which side of the fence you're on and what you're doing, the stock market has become a casino. I mean, at the end of the day, it's nothing more than gambling, and and they're on the news every day talking about betting.
Yeah,
Everybody just
exactly.
you're betting. I mean, that's what you're doing. You're betting in the stock market. So that's all stocks, financial assets, Bitcoin, gold. It's all fake. It's just a casino and it's gambling. And nobody can tell you if it's going up or going down the next day. Nobody can tell you what the value of anything is going to be a year from now, 5 years, or 10 years from now. Nobody knows
Yeah.
in those regards. Now, with real estate, again, no matter what, that there's a tangible asset that you can put your hands on that's going to be there. Now, people might say, oh, well, Apple's not going anywhere, or Google's not going anywhere, or YouTube's not going anywhere. Well, nobody thought Enron would ever go anywhere. Nobody thought GM would ever go bankrupt. There's been major conglomerates that have vaporized and their shareholders got wiped out, in situations that, nobody can predict. So that's really the problem with the stock market. It used to be a place where you could actually value a company and have real price discovery. Now, when you look at like GameStop and all these other things, it's just a speculative game of bubbles and, people jumping in thinking that they're going to be missing out. And it's just nowhere where you can predict a certain outcome on an investment.
Yeah, the stock market has become this generation's sports betting, right? They're
Mhm.
addicted to the little hit of whatever
Well, it's
that
a game.
it's a
It's
game.
not even sports betting. Yeah, I guess you could call it sports betting, but yeah, it's a game. Robinhood's gamifying it.
Yeah.
It's becoming more and more of a game, with the SPACs and all the different things. And, again, we talk about it a lot. The people that, talk about Bitcoin and all these other things and all these investment banks that are now getting behind it, they're not buying Bitcoin, they're facilitating the transactions and making fees. So you got to remember, the people that are out there that are proponents of these vehicles and the investments are the ones that have something to gain by the trades. They're on one side or the other. They're either talking it up or they're talking it down, and their balance sheet is at stake with these things that they're doing. So all of the media, CNBC is paid by the people that come on that talk up or down their positions. That's how it works. So you got to really read between the lines, not what they say, but what they do and where follow the money, who's getting paid on what's being broadcast. And, that's what's going on. Michael Saylor, a lot of people, whenever we talk about Bitcoin, they're like, well, you don't know anything about Bitcoin. You haven't listened to Michael Saylor. The dude's talking his position up, of course.
$4 billion in crypto on his ass.
And, he bought in back when Bitcoin was, 6,000 or 16,000 or something. So his average cost is way less than the 30 or 40,000 that he's been paying recently. So, it's just really interesting times. And I think, unfortunately, the markets have become Vegas, and something is going to be done about it at some point once a bunch of people get hurt through this next crash, because it's coming and people are going to get hurt big time. It's going to be worse than we've ever seen.
Yeah, this is certainly with the stock market, it's closest to the .com bubble I've ever seen, especially with these SPACs just, spending stupid money, going public. It's I've never been I'm not touching stocks since the .com bubble. But again, real estate's not easy today either, right? It's pretty richly valued today, and finding deals is tough. That's why you got to do the work, stay diligent, look at it every day.
But the difference is there's real price discovery in real estate where there is not in the stock market. You don't know what something's worth in the stock market. It's totally speculative. Real estate, if it's cash flow, well, it is what it is. You've got income, you've got expenses, and you've got debt. So you can have real price discovery in terms of what you're willing to pay. And you can pay whatever you want for a property as long as it meets your return requirements, which may be zero. You may say, you know what, I don't need any cash flow. I just want to own this thing at the end of the day. And then I've got payments coming in once it pays itself off. So that's the other thing. Real estate pays for itself if you have a cash flow producing property. Stocks aren't going to pay for themselves.
Agreed.
Sure, they can go up and you can use the increase to buy more stock, and you can dollar cost average and you can do all that. But again, at the end of the day, when that vaporizes and becomes worthless, which as we see, companies are getting out innovated constantly, as these things go along. And, the real key is price discovery, understanding where the market is. And if there is a market in real estate, you can absolutely scientifically do that. So there is no guesswork. It is what it is.
Totally agree. That's why I talk about do the work, look at it daily, 10 to 20 minutes, get after it. You can't, after working a full day, 12-hour day at work, I just couldn't do that another, 8-9 hours with stock. So real estate was just easier. I took the least path of resistance, and it's paid off. So very, very cool. Any closing thoughts on this topic?
No, I think it's good. And I think, you can find cases, for and against. I mean, you can find a lot of wealth created through the stock market, a lot of very, very wealthy people. And, hey, if you're out there and you're young and you're looking for a way to make a ton of money fast, get in the markets, man, as a manager or an investment fund manager or hedge fund or investment banker or something like that, and facilitate these large transactions, because that's really where it's at.
Yeah.
The people making the bulk of the money in the stock market are the people facilitating the transactions and getting fees on large transactions, because there's large pools of money that need to be moved. The Warren Buffett model, I don't know that works anymore. That's the big interesting thing. He's one of the only ones that has been a value investor that's created enormous wealth. I don't know that can work anymore. I don't know that value investing is a thing and is even possible in the markets today. Whereas on the real estate side, I think you've got more examples of value investing and
for sure,
where you can prove that model.
Very cool. Well, Greg, thank you very much for your time. This has been a lot of fun. These 3 episodes were true fire. Thank you very much.